It's time now for our weekly market monitor, who is investing in real estate investment trusts, otherwise known as REITs. The last time he was with us, he recommended Prologis, Invitation Homes, each up more than 20%, and Simon Property, which is down about 10%. Jeung Hyun is with us, or Hyun, I'm sorry, is portfolio manager at Adelante Capital Management. Welcome back. Nice to have you here.
Great. Thanks for having me back.
And you still like real estate, and you think it's going to do well near term?
Absolutely. Near and short term. I mean, near and longer term.
Longer term. Let's get to your first pick, and it is Americold Realty Trust. Why do you like it?
Americold's the only publicly traded REIT that focuses on temperature-controlled warehouses, strong food industry fundamentals, as well as a growing consumer preference for fresh but perishable foods should continue to drive demand. We also think Americold is going to be a consolidator in what is a fragmented industry.
Next, I guess it's a vote on Hawaii. The Hawaiian Real Estate Investment Trust, Alexander and Baldwin, it's got a yield of 3.09%. Why do you like this one?
Alexander & Baldwin's a local sharpshooter that owns a diversified portfolio of commercial real estate in Hawaii, where the economy is doing great. I do want to point out that about 2/3 of the portfolio is grocery-anchored shopping centers, but we're comfortable with that exposure because of, one, the grocery component, and two, because it just costs more and takes longer for retailers to ship their goods to Hawaii.
And we finish up with Invitation Homes. The dividend is just under 2%, but you make the point that it is the largest single-family rental REIT in the U.S., and it's in an awful lot of markets.
Yes, this has been our pick for 3 years in a row, so the thesis is still intact. The household formation in Invitation's markets, which is mostly Sunbelt states and the West Coast, is 2 times the national average, but the supply of affordable homes has not kept pace with that. That's the reason why an average tenant stays for more than 3 years in an Invitation home.
The Fed is widely expected to cut rates again next week. Is that good or bad for real estate investment trusts right now?
I think investors and your viewers should focus more on what's happening on the long end of the yield curve, what's happening with the yield on the 10-year, and that's been going up, which could potentially pressure REITs. In the long run, an improving economy should help everybody, including the landlords. I do want to point out that the total return for REITs in the past 10 years has been identical to that of the S&P 500 index, which is around 13% per year, despite whatever's been happening with the Fed policy and longer-term interest rates.
That is a good fact. Thank you so much, Jeung. Nice to have you with us.
Great. Thanks for having me back.
Jeung is with Adelante Capital Management.